How do you deal with debtors? How do you deal with creditors? How do you manage your budget so you don't run out of cash? If you're being swamped with new opportunity, how do you make sure you don't grow broke? Well, I wanted to introduce you to Amanda Fisher, aka the Cashflow Queen. She's the author of 2 #1 Amazon best-selling books on cash flow and finance. She's won numerous international awards. She speaks for Amex, she speaks for Xero, and she's on a mission to be able to educate business owners about their numbers and about optimizing for cash flow. Her presentation is about unscrambling your numbers in a time of crisis. And the key thing I think you're going to get out of this is about her articulation of the key numbers and metrics that you need to be focusing on to optimize for the times that we're in. I think you're going to get huge value from Amanda. But before I hand over to her, let me give you a little bit of context. So you're about to sit in on a session from one of our crisis reinvention team, but let me give you some quick context. When COVID started to seriously impact businesses, we mobilized experts from within the Dent community to be able to help business leaders like yourself navigate the difficult decisions across a variety of topics, including how to access finance and grants, to cash management, to human resource law, to marketing and sales strategies, to cool tools and tech that you can use from home, through to high stakes leadership, health, wellness, stress management, not just for yourself, but for your team, and look, a whole lot more. For the full schedule, with more being added every week, visit dent.global/reinvent, and we hope you find it a useful resource. All right, let's do this.
Hello, and welcome to this session on the finance focus, specifically how to unscramble your numbers in a time of crisis. But first, let me tell you a little bit about me. Amanda Fisher, aka the Cashflow Queen. And I've written a number of books, contributed to others, and do a lot to help business owners to understand the numbers. I mean, that's my whole mission in life. And now more than ever, knowing your numbers is so key to, surviving this crisis. First thing I want you to do is don't be like this pussycat hiding her head or his head in a paper bag. You can't. And if numbers aren't your thing, I understand that. I get it. But you're going to have to face them now. Because now, more than ever, you need to know your numbers. They're just so key to surviving through this time period we're currently in. So take your head out of the paper bag and let's start having a look at the numbers. But where do you start? And particularly if you're overwhelmed with numbers in the first place, where do you start? Good question. And there are lots of different places you could start. But I think one of the things I have developed over a period of years is I've identified a framework, what I call the profitable modern business framework. And for me, a modern business, there will be even more modern businesses coming out of this crisis. And if, in fact, you aren't converting yourself into a modern business during this crisis. A modern business is one that didn't exist 5 years ago. In fact, it probably couldn't have existed 5 years ago because we didn't have the technology for it to exist. It's a business that's not tethered to infrastructure. It's one where it may have a local reach, but has the ability to go national and the potential for global. And the team is likely to be spread around the world. So we have team members potentially around the world, and particularly now we've certainly got team members that are dispersed into their homes rather than potentially, meeting in our office or business premises. That's what I define a modern business to be. So it's a business that can be done anywhere with a widely dispersed team that can serve the world. And what I've identified is that there is a whole framework around what I call this profitable modern business. So obviously, to be in business, we want to be profitable as well. And yes, today it's not about being profitable. It's about surviving. It's about looking to the future. It's about looking at how we can perhaps reposition our business in a different way so that we can make the most of the situation we're currently in. So there are three main areas that I believe that more business owners are looking for in their business. They want confidence. They want to be confident in the business they're running, in how they're running it, what they're doing, and that whole situation of what the business looks like, and just being confident about what they're doing. They're wanting to have insights as to what's happening both in their business, in the world around them, and obviously particularly in terms of what's available today in the current crisis we're in. And ultimately, business owners want to take control of their business. They want to control the business and not have or feel like the business is controlling them. It's very much about this confidence, insight, and control, the key elements that business owners are looking for in business generally. And then there are what I consider the core concepts. The core concepts, the basic foundations that every business owner needs to understand for their business. And once you've got a handle on the core concepts, it's then about focusing on the management. So having focused management that's making decisions in the right way based on what's going on in the business and, again, what's going on around the world, looking at the insights that they're finding from within their business. And the third area is planned growth. Growth is great, absolutely, and we're going to be looking for growth down the track. But ideally, we want it to be planned. We want to know where we're going. We want to have some idea of what it looks like or what we think it might look like. And they're the three, the main elements of a modern business and a profitable one into the future. Within each of these three, there are further three components, and what's my 9-step framework for this profitable modern business. And what I identified was that there are different numbers and different areas to focus on in business, depending upon the situation you're in. So in our crisis situation now, there are 3 areas that are important to focus on right now, today, and some of the other 6 areas are relevant for down the track and at different points depending on the stage of your business, depending on what's going on and the circumstances that are surrounding you and your business at that point in time. So we're going to focus today on 3 of the components of my framework. The 3 we're focusing on are break even. It's a number that a lot of people don't know, and it's a key number even more so in this crisis time. But it's a number that I believe every business owner should know, irrespective of what our circumstances are. It is just such an important number to know. Second item is the cash flow forecast. Really, really important. A big topic. Can be confusing. I'm going to do my best to simplify it down to make it a little easier to work on yourselves. And then number 3, key numbers to focus on, again, in this period of time. So looking at, in this situation, what's the break even, the cash flow, and what are the key numbers to focus on. So let's start looking at break even. And you may feel like, and I think a lot of people are feeling a bit like this piggy bank. He's floating, but he's only just floating. There's so much more of him that's sinking underneath. This piggy bank doesn't even have his nose above the water, let alone his eyes. He can't see, he can't breathe. He can just hear what's going on. And, he's got a little space in the top for some more money to go in, and really more money going in, more situational issues going in, and, he's in problems. Understand that break even, it's about getting our piggy bank up to a level where we know we're covering off our costs. So let's get into a little bit more detail of what break even is. And before I show you some numbers, in simple terms, break even is the amount of income in the ordinary course of events, and I'm going to redefine income in today's world, the amount of income you need to cover the business costs. So how much do you need just to cover costs? Not make a profit, not make a loss, but just to cover costs. That's the basic definition. Now, when you look at that, and I've got two columns in this example on the screen at the moment, but if we look at the as it was, that's kind of how business has been a few months ago, let's say. I've split it into three areas of costs. There are fixed costs. And these are costs that typically you're going to pay whether or not you've got your doors open or not. And whilst we're in really different times at the moment, so some of these, whilst they are traditionally fixed costs, may in fact be able to be varied at this stage. But generally speaking, fixed costs include rent, insurances, so that's your business insurance, your workers' comp insurance, even if you take it into up to some of your personal stuff, your life insurance, income protection insurance, insurances are fixed costs. Some subscriptions are fixed because you can't not have them. Your accounting system subscription, you can't just turn your accounting system off and then rejig it up. You'll lose all the data. Your CRM, your database systems, you need to keep them going, so you've got them for when we get back in business. So there are a number of things that are relevant that are fixed subscription-wise. Some are potentially variable. So subscriptions, licenses and memberships, professional association memberships may again be variable. You may have some that you're not required to be a member of. You may choose to drop out of some. But any that you require, licenses that you need to have to be in business, generally fixed costs. Telephone, internet, again, fixed. The amount might vary from time to time, but they're fixed. You've got to have your phone number, you've got to have your internet. And even if you shut down your business, it's probably not appropriate to shut down your internet and then try and rejig it up. Knowing our telcos, that might be a challenge to get it back up when you want it back up. So it's a fixed cost. You're going to have to keep paying it. Additionally, website, domain names, your email address systems, all of those you need to keep in place in order to keep business at that base level. Then there are variable costs. And variable costs include perhaps cleaning of your business premises. If you're not in your business premises, don't need to clean it. Although you may need them back in before you go back. Electricity. Now, your business electricity might come down because you're not in the premises, but in fact, this one might go up if you're paying some electricity for your team, if you've got them working from home, and perhaps you're paying for some of that costs. Training costs, definitely variable. You may choose to continue it, you may choose not to, so you may actually spend more now or less. So some of these variable may go up, may go down. Travel costs, that's not happening at this point in time. So whilst you might have done a fair bit of traveling before, now, that's a variable cost that you may not have moving forward. Printing and stationery, again, a little bit depending on volume of work. So, and these are just some examples. Obviously, there's a lot more expense categories that we can work on, but just as an example of the types of costs that are fixed versus variable. And then there are your employment costs, and I haven't called them fixed or variable because I consider them a kind of completely different category in their own right. So all your employment costs, everything related to your employees. And you add those up together, and in the situation of my as it was, we've got $30,700 of total costs. If you're in a service-based business, that means your break-even is $30,700. However, if you're selling products, there's an extra little step you need to take, which is to take into account what the actual cost of your product. So using a very simplistic example of if you sell a product for $10, it costs you $7, you've got $3 of gross profit. Your gross margin is 30%. So using a very generic 30% number, you'd need to work out what your number is. So what is your gross profit as a percentage of total revenue? What that percentage is. Apply that to your total cost to gross yourself back up to what is the revenue you need, the sales you need in a product-based business, which in this case is about $44,000 to break even on your $30,000 of expenses. So what I'll be doing is have a look at what was it. What was your break-even number before you started having to cut back anything? Then look at it how it is as it is now. What have you been able to reduce, eliminate, minimize, defer? What is your break-even cost now? Now, these are just a few example numbers I've used. They're not real, obviously, but I've just gone, okay, well, maybe we've got a 50% rent deduction from our landlord. We haven't been able to change any of the other fixed costs. But from a variable cost perspective, we don't have the cleaners. We're not doing any spending money on training, no travel. And yeah, we don't need any printing and stationery. We're going to use our supplies, which is not going to buy any more. But we still have to pay the electricity bill because that's now being dispersed around the team members, perhaps. And we're still keeping this team on. We're still keeping the team employed at this point in time. So we've only been able to pull the cost down by, in this case, $5,000. Hopefully for you, when you go through that and do some really fairly ruthless cutting through that, and I'll talk about that a little bit more coming up, your as-is break-even number will be significantly less than your normal operating business break-even costs. And again, so service-based business, I've got it down to $25,000. Again, product business, grossing up on that 30% margin makes it about $36,000. Excuse me. No, sorry. Promise I don't have the virus. But so that's what the break-even figure is. And it's really important to make sure I'm not missing anything there. Really important to do it now and what it is now. And it may be that, your break-even figure this month might be different to next month and the one after. So, just looking at what are you cutting out, what are you aiming to defer, and what does that look like? So please, I'd love you to run those numbers yourself. See what your break-even number is. It's a key number to have in the back of your head. But let's go move on to the part of the bigger topic today, which is cash flow forecasting. It's, and let's just get into it. Cash flow forecasting simply is how much money is coming into your bank account, how much money is going out of the bank account, and how much you got left. But it's a little bit more, we need to go into a little bit more detail to work out how to do that. So the first step is to do a deep dive, really deep dive. And I mean really, really deep dive into every single expense you're paying, every single thing. Now, there are a couple of ways of doing that. One way is to go through your profit and loss statement off your accounting system and look at every single line item and delve further into the detail. So if you're looking at your advertising costs, you might need to go further in. Who you're paying, what are you paying, what are the components? You're probably paying 4 or 5 things in that advertising cost. Subscriptions, again, a classic, usually got lots of things in it. Need to delve deep into it to find out what's in it. General expenses, might have to have a delve into that one as well. And some, and every other expense. Some of them, like rent, it's just one line. You know what your rent is every month, and that's straightforward. Electricity, those sorts of things. Insurance, you may have multiple insurances that you're paying. Have a good deep dive into each one and interrogate every single supplier and ask yourself the question, is this a fixed cost that I cannot get out of at this point in time? Is it a cost that I have to keep going in order to be able to kickstart my business when we can? Is it a cost that is, whilst it is still fixed, that I have the ability to negotiate a reduction or negotiate a deferral? Is it a cost that I can potentially look at finding a cheaper or free version, particularly when we're talking online software? Is there a, a CRM system, you might have one of the really good ones with all the bells and whistles. You're not really using all that. Now might be a time to consider, what if we moved it across to one that is not as expensive, but it still does everything you want it to do, and or even alternatively, one of the free ones. So there's some options there to deep dive and look at fixed costs. What can you do with those? And then in the variable costs, what can we eliminate? What do we not need to spend? What is not necessary now? I mean, obviously, if you start not working from the office anymore or your business premises, there's no staff amenities, no tea, biscuits, and chocolate no tea, coffee, and chocolate biscuits required to be buying anymore. So what are those things? The lunches or the social things that you may be doing. You may be spending them out in a different way and finding ways to have something delivered to your team. So you may still have some cost, but what is it going to be? So have a look at every single one of those. Some you'll be able to eliminate. Some, in fact, you may be increasing. As I say, you might end up spending a bit more money to send something to people's homes, your team's homes, so that you can, G them up a little bit while they're working from home and have something as a surprise delivered to them. There may be some things there that you can do. You may, in fact, ramp up training potentially, and so that might in fact be an increased cost. Deep dive into those costs and identify what you can change and what those look like. Again, employment costs, a really complicated area to look at. Make sure you're getting proper HR advice on that before you make any changes to employees, remuneration rules, regulations, etc. There's really some key things on areas in there that do need specialist information. First of all, we're looking at expenses. So we deep dive into the expenses and come up with where we're at now and what we think the next few months are going to look like. Then we go into what traditionally is mission impossible. What is the revenue coming in? What's the income coming in? Now, for some people, unfortunately, at this point, mission impossible, no, that's an easy one. I got nothing. Yeah. And that's not good. But you know what? You probably don't have nothing. You have nothing in the traditional sense that we consider cash flow as revenue income in the business. But what we've got now is government initiatives, potential business loans, funding back from your own resources. We've got revenue or receipts that we can get into, money coming into the bank that might be coming from different sources to the ones we usually do. Or it may be that you're able to reposition the business in some way and create a different stream of income that can keep the business going. So this is when you're looking at your income. What money is coming in? So you may even have invoices that are outstanding from when you did work already that you need to get paid or will come in, payments and dribs and drabs along the way. And if you're still in business working from home, then you've still got invoicing being done and payments coming in. So you do have some idea of what money should be coming in. Say government initiatives, fundings, whatever they look like. So have a look at, and it's always a bit of a crystal ball gazing, looking at what money is going to come in. But some will be fairly easy to identify and others will be a bit more of a guess. But get some ideas of what you think it's going to look like. What's your best guess? What's your best idea of what you think money is going to be that's going to come into the business bank account over the next period of time? And then I want you to consider whether or not you have a stash of cash. Now, ideally, your business should have, in the good times, 3 to 6 months of costs in the bank. Now, it may not be in the operating account. It might be in a separate savings account. It might be even in, you might have even taken it out and popped it in a mortgage offset account. But it's a stash of cash that the business has. In today's world, that's still relevant. Your stash of cash may, in fact, be money you've accumulated personally, that you've got, accumulated, you've got some money in the bank, personal savings, which may need to be some of the stash of cash for your business. So what funding have you got available? What money have you currently got you can get your hands on. And so that's, money that's in the bank, money that might be in a mortgage offset account that you've put there from business money, personal savings, which might be a mortgage offset account too. What have you got that is cash now or available cash now? I'm not talking here credit cards. I'm not talking about going into debt in this situation. In terms of this is how much money have you got available for the business right now? What's that stash of cash? Now, as I said, ideally it's 3 to 6 months. For a lot of businesses, it's a lot less than that. And, it may be 1 month, it may be 2 months. What is that stash of cash you've got available to the business right now? Go away, see and work out what you have available right now. Hopefully it's more than zero. It's some money you've got accumulated. So then we're looking then at pulling it all together. Now, this is a very abbreviated version of a cash flow statement. I would normally have much more detail in it, but just for the purpose of being able to put some numbers on a screen that are legible, because a normal cash flow forecast has got a lot of lines on it, and the print on a screen share is so small as to not make it very useful. So I've summarized it. And I want to just focus to start with on these first 3 months. So let's just assume for the moment that we have, we're in shutdown mode for 3 months. We know it may be longer, but just for the purpose of this for the minute. You've gone through your break even, you've identified your fixed costs and what they are now. So what you've reduced your costs down to. And we're filling those in. So we've got fixed costs, variable costs, and employment costs. And some of those, numbers, they are the reduced costs we've got today. And we're looking at those are the costs at the moment. We're not putting anyone off. We've still got our employment costs sitting at, we've got $40,000. We're keeping the team on for now. And I've put in a little bit of existing revenue that was still to come in. I'm kind of hedging my bets a little bit on these numbers as to this is a business that's closed down. On the other hand, it's a business that's still operating. So it's, the numbers aren't specific. It's just getting an idea of where they go and what they might look like. And then for month 2 and 3, I've said that, look, we've got some funding. We've got some government initiatives, money coming in. There's some money coming in. And look, it may be some existing revenue if you're still in business and you've still got some income coming in, but you've got some money coming in the door to help pay those costs. Well, what we're seeing in that first month is not much money in, a lot of money going out. And in fact, from a net cash flow perspective, we're 51,000 behind. So there's 51,000 more money gone out than money coming in. And this particular business had 1 month of money in their stash of cash. So the balance at the start of the month was $60,000. They had roughly a month's worth of stash of cash. So it's still okay at the end of month 1. Then we get into month 2, and again, they're short. They're not quite as badly short, because now we've got some extra funding coming in. We've got a little bit of extra support going on. Still short. We've got the 9,000 we started the month, but we're 23,000 short. We actually don't have enough money to pay all of those costs. And then in month 3, again, we've got a similar situation. We're still 32,000 down, and we've added again to our outstanding and bank balance at the end of the month, and which means we're short of money. So what this means is there's a few ways of looking at this. First way of looking at this is are there any more costs we can cut out? Maybe we can't afford to keep the team on, and we need to cut down on the staff in some way. Maybe that's one option. The other option is there some other personal funds or other money? So I've said that we started at 60,000, but maybe there is some more money that you have available that you can put in to the business in month 2 and month 3. Those are the sorts of questions to ask. And what I would suggest is do as much of the number crunching work as you can. Do that deep dive. Do a little bit of this Mission Impossible on the top line of the money coming in. Try and put some information together, and then go and talk to your accountant, perhaps bookkeeper, or your business coach if they're financially savvy, and get some advice on it. So do the hard work so you're not paying them to do it just because you can't afford to pay a lot for your accounting fees right now, and I get that, but you really need their advice. It's worth gold. You just need to get their advice to get them to go through it and go, yes, that makes sense. Yes, you're right. Okay, now what can we do? What are our suggestions? And it may be that you've got all this and you don't have any idea what your government initiatives are and what other funding options you have, and you need to get the advice on that. Have the basics, because then they can help you to determine whether or not you've got any initiatives that you can access, and if so, to how much, and where they fit in the cash flow and what it's going to look like. All those sorts of things. Use them to get the advice on it. Try not to use them to get the number crunching. If you need help with the number crunching, perhaps get your bookkeeper on it if you've got a bookkeeper. Otherwise, I'd really recommend doing a lot of that if you can yourself, just as a way of when it works. Otherwise, absolutely, you need the advice. Get the account bookkeeper onto it, because you need to get some help on this. So that's your basic cash flow forecast for perhaps the next few months when things are not really operating. But then what's going to happen is we're going to have, at some point, some date in the future, and we do not know when, there's going to be the opportunity for us to restart. And our restart is going to look different for everybody. I believe that you potentially have 3 different ways of restarting a business. The first way is it's going to be a very, very slow burn, where income's going to start trickling in. It's going to slowly increase, and it'll just slowly get us to where we were. Then I think there's going to be other businesses that are going to have, or other situations where we're going to have a bit more of a stable growth. It's going to be a bit more, more of a line up, better. And there are others that are going to do the exponential, open one day and kind of back to where they were. Problem is we don't know which is which, and you don't know what's going to happen with your business. And what I recommend is, having got your base cash flow forecast for these months while we're in lockdown and shutdown, and businesses and working from home and remotely or not working, whatever your business looks like for the moment, while we're going through that process, the next step, which is really key, is to identify and work through the 3 different versions. What happens if my business only starts slowly? What does that do for my costs? What's the revenue look like? What does it mean for, my staffing levels? What does it mean for what I've agreed in terms of any deferred payments? How does that look? The second version to do is, what happens if I've got stable growth? So I'm not starting and instantaneously back to where I was, but over a fairly reasonably short, not too long period of time, I'm getting my, building it back up to where it was, and it's stable. Again, what does that mean for costs for your employees? What access have you got to your employees? What does that look like? And then again, if you've got that exponential, you open the doors and bang, businesses, just people are in your premises buying madly, and you're kind of there kind of go, oh my goodness, what's going on? There are a whole raft of different things that need to be thought about on that, in terms of your costs, in terms of employees, in terms of timing, and particularly if you're a product-based business, because the lead time of buying your products and having them delivered, particularly if you're importing from overseas, it can be significant. So what's that going to look like when you start business? How are you going to fund the purchase of the replenishment of new stock if you need to buy it in advance, particularly when we don't even know what our restart date is? So there's a number of different nuances. Again, get some advice on it. Get some help from people that know and understand their numbers. Really important. So looking at a little bit more detail then, looking at months 4, 5, and 6. So in this situation, I've gone and said, okay, we've got a bit of a start moving on. It's a bit of a slow, gradual start. First month back, I'm calling it month 4 just for the purpose of this. Month 4, we're the type of business we do the work, we invoice, we get paid 30 days, let's say. So no real money coming in the month, in that first month. We're working away, we're invoicing, and so we've got some money starting to come in month 5 and some more money coming in month 6. But it's still not quite enough to cover all our costs. So we've now simply got, so month 4 was a really tough month, because we've, our reduction, we got 3 months discount deferral on rents and things. Now month 4 we're supposed to be paying in full, so we're back up to our full fixed fees like they used to be. So our costs are higher, income wasn't there, so we've had a bad month in month 4. Month 5, a bit better. In fact, it's probably the best month we've had. And month 6, again a good month, but still we're going backwards. And that's what I'm saying. Like, from a funding perspective, from a financial perspective, it's not just about this 3-month period that, or whatever period it is, that we're in shutdown mode. It's going to be a much longer period of time that this is going to impact your business from a cash flow perspective, possibly even from a profit perspective as well, as negative cash flow is usually endemic of a negative, loss situation. It's going to take longer in some situations. Other people, it'll be a quick pickup, and they might turn it around quickly. So knowing what you can, and again, yes, mission impossible. This is the crystal ball, blue, who knows? But start to try and put some realistic numbers in and have a talk with your accountant about how to do that. That's the key message is, and look at what those numbers are. If you've deferred costs, if you've got, reductions for a period of time, it may be that you need to then, when you've done this forecast, you need to go and negotiate 6 months reduction in terms of costs, of your fixed costs, not 3, to help you to come out the other side. So there's a number of decisions that can be made around once you've got some basic numbers in the system, and that's where you can start looking at that and go, okay, well, this isn't good. I can't find 150,000 anywhere. Okay, so we're going to have to look at these fixed costs. I'm going to have to look at these employment costs. What does that mean for my government funding initiative stuff? What's that look like? And then run a different set. So it's about looking at this in a way that is going to not look at just the short term, but look at that longer term, the restart time frame. And your actual cash flow will be a lot more detailed than what this is showing. So I want to move on now into the key numbers to focus on. So I do like to work and recommend regularly that 3 numbers. Focus on 3 numbers. If you have a list of 20 numbers you're looking at, you're not going to be focusing on them. You're not going to give them the attention they need. So find 3 key numbers at any point in time to focus on, to work on, to improve. And once you've got them under control, in general terms, you can then start to add a few more on, which are the 3 focus numbers, while still keeping an eye on the original numbers that you were focusing, and you kind of build it up over time. But to start with, at this point in this type of crisis, there are 3 numbers to focus on. The first number to focus on is your outstanding invoices owed by your clients or customers. So if you've shut down business, or your reduced business is, work from home in some form, it's changed. If you invoice your customers and you have outstanding invoices from customers and clients that haven't paid you yet, how much are they? Who are they? It's time to have some friendly, nice conversations with those people. Some of those people will be in a reasonable financial situation and will pay their bills because they've got a stash of cash and they've got the resources, they've done their cash flow and they know they're okay, and they'll be able to still pay their bill. There are others that are not going to be quite so able to, but that you may be able to have a conversation with them about paying something. And then there are others that you may just have to sit tight with until they're back in business. But keep an eye on those outstanding invoices. What are they? If you're still in business and you're still working and invoicing, even more important to just keep a track on those invoices and what are they and what are they, who is it, and keep a track on that number. Very important number to keep track of. The second number is your ongoing liability for bills and deferred costs. So in this situation, you've got, your suppliers, the bills you've got. In some cases, you may be able to defer them, delay them, pay them off. You need to keep a record of it. So if you've got your list of your outstanding bills, keep a record of what you've agreed. Part of that will then flow into your cash flow forecast, because if you've agreed to pay a bill over 6 months that you'd normally pay in next month, and you've got that agreed, you've got to pick up 1/6 of it every month in your cash flow forecast. Make a note, keep a good record of how much you owe and what are the deferred amounts and when you're due to start paying them, or when they are due for payment. Another second key number to look at. And the third key number to look at is your cash flow forecast. Now, when I say that, I'm actually talking about really the bank balance, and that bank balance line moving forward into the months ahead. What does it look like? You need to be forward focused. We've got to be looking to the future. And one of the things I'd suggest, so I, in my example earlier, showed a month-by-month cash flow forecast. And that's generally when businesses do a budget for 12 months, we do a 12-month cash flow forecast off the back of that budget, and it's a month-by-month exercise. There is another version of a cash flow forecast which I regularly use, which is one broken down week by week for usually a 12-week period. And that's because within the month, money coming in and money going out doesn't always correlate. So you may have money coming in on the first week of the month, and that's enough to cover the wages that are on the second week of the month, on the first week of the month, but then you got wages on the third week of the month and there isn't enough money to cover it. But overall, because money comes in the fourth week of the month, you're good. So what the month by month does, it is often hides the up and down through the month. So for some businesses right now, a week by week will be really important to do. For others, the month by month is going to be acceptable. Have a think about what you think might work for your business. And if you need to just create it out week by week, then split it out week by week. What bills do you have to pay? What wages, what other costs do you have to pay in each particular week in the month? Particularly relevant if you've got fortnightly wages, because some months you get 3 fortnights, most months 2. But when do you get that horror 3-month fortnight? How does that work? Other bills that are paid, beginning of the month, end of the month, what's the when do you expect money to come in from whatever sources of money you've got coming in? What does that look like? So have a look at what that looks like. So you've got either a monthly one, well, you probably have a monthly one, I'd suggest, and you may also have a week by week one. What I suggest doing is insert some extra columns in them and for between each month or between each week, and fill in the actuals. So rather than override the forecast, add in an extra column, which is your actuals, and determine when let's talk about the monthly for a minute. In terms of your monthly costs, your forecast was for all these. This is what you actually spent. Now, you didn't pay this bill because you got an agreement to defer it. So now we've got to put it in the next month or the month after, or at some point down the track. So it's a case of looking at what you've actually done compared to what you said you were going to do or thought you were going to do, and then identify anything that needs to be moved into. So it's a dynamic, updated all the time cash flow forecast. And the number to be watching is that overall bank balance situation because of funding. Do you need that extra funding? When do you need the funding? If you've got the funding in place, is it going to still cover everything you need? That's how I would then use the cash flow forecast over these next few months. Time now for some FAQs. And yes, I know it's tough and there's so much going on at the moment, but let's have a look at some frequently asked questions. One of the first questions I get asked is, how much money do I need to keep my business going through the crisis? And every business, the answer is different. Once you've done that cash flow forecast and you've got, really pinned it down as accurately as you possibly can, it will tell you how much money you're going to need. So the cash flow forecast will give you the answer to that. There's no other magic bullet or easy solution. You need to go through the process of working that out in detail, do that deep dive into the expenses, do that mission impossible on the revenue line, income line, money in the bank line. How much is your stash of cash? What are all your different options? Work out what your balance is. You may find you've got funds that will keep you going for a few months, and then in month 4, 5, or 6, you suddenly have a problem. It may be you've got a problem from day one. It might be you've got a problem in 2 months. I don't know. But how much money you need will depend on how much stash of cash you already have, and whether or not you're still operating and invoicing and getting paid. That will be the big difference on how much money people need at this point in time. But do that cash flow forecast, because it will help you identify how much you need. Second thing, how do I deal with outstanding invoices owed to me? Debt collection, phoning up for clients or customers when they owe you money is never anyone's favourite job. I know. And certainly from me, it's one of the things I hated the most, because I understand more than anyone whether or not they actually could afford to pay the bills. So chasing up the bill was always it always is a tough phone call for an accountant to make. But you still need to be doing it. So for me, my advice today, it's not about sending an email. You may have an automated system off the back of your accounting thing that automatically sends reminders. Those can go, preferably probably turn them off if you can, if you remember to. But pick up the phone. Pick up the phone and ask how they're going. How are they doing? Are they okay? Just in terms of their business. You'll find that some businesses are still operating and they'll still pay your bill. Some businesses are at the other end of the extreme, shut down, no money, and they're in all sorts of strife. And then there are businesses in the middle. So sometimes, some of them will be obvious, but some of them won't be. So have that conversation. Just have a chat with them. And you see if there's some way, if you can, and if they can, for some money to be paid. So if there's a little bit of money being paid in on every invoice that's outstanding, it helps you to pay your bills, and, and all sort of money goes round. So small business owners don't like receiving calls to say you owe me money, because at the end of the day, we want to help each other. So we don't like it when we don't have enough money to pay our suppliers. So the conversation is actually just as hard on both sides. Just remember that when you're talking to them, chances are they really do want to pay you, and they're feeling embarrassed and upset and nervous and scared and fearful about how they're going to pay it. And they're feeling, ashamed and upset and stressed because they can't pay, because they understand. They really do. That by not paying you, you can't pay your suppliers and you can't pay your staff. And so it's this vicious cycle. But we need to help each other. Make the phone call, have that nice, friendly conversation, and see if you can come to some arrangement. If you can't, that's fine. Make a note of it. And I think the big thing about that is to make a note of the conversations, what's been agreed, and keep a record of that. And on the tip side, what are my options for renegotiating payments? Some cases, you may have the option to have a complete discount. Certainly with some of the rents I've seen, there are people that are offering like a 25 or 50% discount for, a reduction in the rent for 3 months. Then it goes back to normal. And there is no expectation of you paying the amount that's been reduced. Others are saying, yes, we'll give you that with a deferral. So yes, we don't expect you to pay rent for these 3 months, but you're going to have to pay them later. There's different versions of that. So it's about discussing it. So there's the deferral, which means you're paying it later. You still got to pay it, but you got to pay it later. There's the negotiate some kind of discount so that you're not paying the full amount. And then there's payment terms on how can you pay things off over a period of time. My big comment on this, and this relates to question number 2, from whether you're talking to your clients and customers or you're talking to your suppliers or your landlord or whoever it is in terms of your bills to pay. make a note of what you've discussed, and to the extent you've agreed something, I would follow up that phone call with a nice friendly email that says, thank you so much for your time, really appreciate it, just want to confirm this is my understanding of what we discussed on our call today. I'm going to do XYZ, you're going to do ABC, and this is what we've agreed. If I haven't got this right, please let me know. Or if you don't agree that this is if your understanding of our call is not the same, please do let me know. So you have something in writing, because as we go months down the track, and people are going to say, yes, but you said such and such, and going to go, no, I didn't say that. So have it documented, have it on the email, and keep a record of what you've got outstanding. Fourth question, how are the government initiatives going to help my business? Get advice on this. My focus today on the finance side of this is being about working out your cash flow, working out what you need, what money comes in, what money goes out. Your government initiatives, everybody's different. The rules are, a lot of the legislation is not in place as I'm doing this recording right now. We don't know the details. Keep in touch with your accountant, and keep in touch with, and keep an eye on your federal and state government websites for the details on their announcements. When the legislation is in place, we'll know a lot more detail. If you are eligible, absolutely. If you need the money and your business, your cash flow is showing you're short, then absolutely, whatever those government initiatives are, then you need to go for them if you're eligible. And obviously a vast majority of businesses are eligible in one way or another. Talking too long, losing my voice, too much talking. And 5, should I take out a bank loan to fund my business? There's no right answer to that. There is no absolute yes, no answer. In some cases, I believe businesses, it is absolutely the right decision. In other businesses, it's absolutely the wrong decision. Get advice. Again, once you've done your cash flow calculations and worked out what you need, what your shortfall is, talk to your accountant about your options. Some of it will be government initiatives. Some of it, in some cases, maybe bank loans. But the big thing for me, if you take out a bank loan, you then need to look at your cash flow moving forward from when the repayments come in, because you're going to have to pay it off. So it's all fine and good to have the funding now, but is your business going to support repaying that money down the track? Assuming that, it takes a little while to get yourself back up, even if you got back to 100% of what your business was, can it fund that the repayments on that bank loan? So it's again a cash flow exercise. It's an advice exercise. There is no right answer. So personally, I believe in some cases, yes, it's the right answer. In other cases, definitely not. So very much look at that. The same applies here with do you use your credit card or not? Any debt is going to take on you've got to repay it back. So bank loan versus credit card. Presumably, the bank loan interest rate is less than the credit card. So if you're going to do something, go for something with the best interest rate you can. Like keep your interest rates low. Credit cards are always a last resort for funding, but get advice on it. And make sure know what it looks like in your cash flow forecast and understand what that means for your business into the future, because you're going to have that ring around your neck a long time down the track. So now's the time to just take time to plan for the future. If you have a business that's shut down and you can't work, in your business, can't do your business at all at this point, now's the time to really plan for the future. If you've now got a business that's kind of, everyone's team's dispersed, working from home, carve out a bit of time to plan for what the future is when you restart. And not just on the numbers, the whole of your business. Just have a good think about it. And if it is business as usual at the moment, still carve out a little bit of time to be planning for the future, and just make sure that you're going to still be okay months and months down the track. It's a great opportunity and time frame now to learn about all those bits in your business that you don't perhaps understand as well as you'd like to. definitely. Numbers are one area that a lot of people don't really understand, and it's an opportunity to take this time now to learn a bit more about them so you can come back stronger when we're able to restart. We've got that date we can restart our businesses back up again to the level it's back in the way we used to, or our new normal, whatever new normal will be. So in order to help you, and for those of you who are at home and want to learn a bit more, I'm offering a PDF copy of my Unscramble Your Numbers book, Unlock the Secrets to Your Business Cash Flow, available off the back of my website, amandafisher.com.au/dent-CRT 2020. It covers off in more detail how to do the cash flows, but it also talks about a whole number of other financial reports and key numbers. And I promise you, it's a really easy to read book, but it's a good grounding for you if you've got time now to get a bit of a handle on your numbers. Feel free to download that from amandafisher.com.au/dent-CRT 2020. And if there's anything I can do to help you at all on your cash flow, any questions you've got on putting together these cash flows, we'll love to hear from you. Again, just reach out to me through my website. I'd like to thank Dent for giving me the opportunity to share this with you and to help you with your cash flow through this crisis.
For more expert talks, just visit dent.global/reinvent, because we believe that the decisions that you make now matter more than ever. We started Dent 10 years ago in the middle of the GFC in London, and we shared the key person of influence methodology as a tool to be able to help businesses thrive despite the chaos. Today, it's a best-selling book, and over 3,000 businesses use the methodology like an operating system for driving performance. And we've learned that regardless of economic conditions, that your primary focus as a founder should be showing up as the go-to brand, the key person of influence in your industry. More important than systems or social media, more important than Facebook videos or launching a website. The goal of showing up as the key person of influence in your industry should be the organizing force. It should be the primary objective that helps align all your other decision making. Because as your influence and reach expands, it becomes easier and cheaper to attract clients, team, media, even investors. When times are tough, it's the key people of influence that become even more valuable and even more in demand. And if you've been in business for a while, you're probably a lot closer than you think. So every week that this COVID-19 thing continues, I'm going to be hosting a weekly talk to be able to help business leaders like yourself recalibrate their focus so they can make the most of the times that we're in. If you're interested in jumping on a Zoom and saying hi with me, you can find the link to register for my sessions as well as all of the crisis response team sessions at dent.global/reinvent. If you found this useful, let us know. My name's Glenn Carlson, and please be brave, have fun. Let's go make a dent in the universe.